Hi, Mitch Argon here with Calneva Realty. Welcome back, and let's go through the October 2023 housing market numbers for the greater Reno Tahoe region. Okay, let's get started. Like in prior months, we'll start off with median price. As you can see, some markets are up, some markets are down. We're fairly stable, however, from 2022. Prices came down earlier this year. They tightened back up, and they're pretty much on par, up and down, but fairly close to where we were a year ago. That was when prices started to see a little softening based on the increase in interest rates. If you look at this visually, you can see over the last 24 months over here, we have the current month pricing. That's for September, which is last month. And this is 2022 and then 2021. So you can see 550 from 2 years ago, 540 from 1 year ago, 609. This is looking at the Reno line here. And you can see we've been a little bit higher, we've been a little bit lower, but by and large, pricing is fairly stable in the current markets. And as we talked about in prior months, that's a function of decrease in inventory, which puts upward pressure on pricing. And of course, the increase in interest rates has put some downward pressure on pricing due to affordability. So right now, that battle between those two forces is keeping prices pretty stable. In terms of affordability, this is a chart that I think gives some perspective as to what's going on in the housing market and why the market is not functioning great overall, at least the demand perspective. And you can see that if you go back to about March of 2020, just pre-pandemic, right in through here, the median price in Reno was $400,000, and the mortgage payment average would have been about $1,389, just under $1,400. This assumes a 80% loan with 20% down and a good credit score borrower with a conventional loan. $400,000 median price, just under $1,400 for the median payment. That's principal and interest only. If you fast forward to today, of course, we've seen prices go up quite a bit. Here we're up about 50% from where we were a couple of years ago, back in 2020, 3 years ago. And you can see here that the median payment off that median price is just over $3,300. This is using the same 20% down, which is of course a much bigger number now, and 80% financing with a good credit score on a conventional loan. So pricing is up 50% median price, and the payment is up from just under $1,400 to over $3,300. It's more than doubled. And so this is the dilemma that we have in the current markets. It's kind of a battle between interest rates and how long will they stay elevated, and what will that do to affordability and pricing. And right now the pricing is holding stable because, as we've talked about before, inventory remains low. So over here under homes sold, on the next slide here, you can see that we're down in some markets and fairly flat in others. Tahoe is up as a big percentage, but it's only 5 homes different. I take a look at these markets in here, the non-Tahoe markets, which is kind of the primary markets we have in our region. On a year-to-date basis on 2023 compared to 2022, and we are down in aggregate in the high 30%, probably about 39%. Most of that took place in the earlier part of the year, where it was sluggish this year and it was very, very active in 2022. But it is down, and of course, that's largely a function of inventory also being down. So it's a very tight market. Month supply of inventory, again, this reflects whether prices will be going up or going down. In general, for under 4 months, there's downward pressure on pricing. There's upward pressure on pricing, would be a seller's market. If we're above 6 months, it would be considered a buyer market, and there would be upward or downward pressure on pricing, excuse me. As you can see, most of our markets are still quite low. We're actually lower in many of these markets than we were a year ago. So markets remain pretty tight. Sellers actually have the advantage in today's market in most cases. Inventory, of course, we touched on. This just gives you a numerical view. Probably the most consistent of all these charts, showing a negative inventory on a year-over-year basis. Tahoe is up slightly from 41 listings to 53. It's a 12 listings gives you a 29% increase. But the big story here is over in these markets, and you can see these numbers are all down quite a bit on a year-over-year basis, and that is creating less opportunity, and that's keeping pricing fairly stable as we've taken a look. A visual look at inventory on a month-by-month basis. We are moving into the time of year where we'll start to see the inventory start to decrease just seasonally because we're heading through the holiday period and the winter season. So we'll see some decrease in that inventory, but the bigger picture is that it's just way down. And the reason that inventory is way down is because people, they call it the lock-in effect. People are locked into a low interest rate. And if my current payment is based on a 3% or a high 2% interest rate, and I need to sell that home to buy another home, and the home I'm buying is on now we're actually just tipping up to 8% interest rate, there's a drastic difference in my payment, there's a drastic difference in my buying power, and so I'm going to do everything I can to stay put. And so we're in a situation where home sellers are people who need to sell, not who would like to sell. It's kind of a must-do versus a nice-to-do type of situation for many home sellers. Month supply of inventory. This is really the key bellwether into pricing. I've talked to a lot of investors and people over time, and they say, well, how do you know when the market's going to start going up or start going down? And this is a pretty good indicator. You can see that the month supply of inventory was extremely low back here in late 2021 and early 2022. And what happened when the interest rates started to rise is you started to see this month supply of inventory going up because the markets were slowing, and there was more downward pressure on price and upward pressure on price. It didn't get high enough to get to an overall buyer's market. As you can see, the markets have adjusted, and have come down and been fairly stable as we've gone through this kind of chronically low inventory period. That's what this is really over here. This rise over here was a function of the increase in interest rates and taking some demand out of the market. So markets are very stable, surprisingly so. Probably will maintain that way. We do have a lot of cash buyers in our market, and many of them are coming from California, moving equity. They're not rate sensitive, and so that tends to create more demand than you would have if everybody who was buying in the current market needed to get a loan. So that covers it for this month. I hope this has been useful for you. Not a lot of major changes in the marketplace, more of a continuation of the theme that we've had going for quite a few months now. If you have any further questions, please feel free to reach out from the email you may have received or from the Facebook, the YouTube information below. The full report these charts come from, the Greater Reno Tahoe Real Estate Report. We've been publishing this since about 2005. It does have some long-term historical data, but it does a breakdown, really nice breakdown in each market. So if you want more detailed information on a specific market, down below, there's a link to the Greater Reno Tahoe Real Estate Report, which we publish. You can take a look at that. And if you need help, please feel free to give a call to me or any of our agents who you may be working with, and we'd be happy to help you further. Until next month, thank you for your time. Have a great day.